Hello and welcome to the ADM Agriculture YouTube channel's fertiliser update. A quick roundup of the nitrogen markets this month, as we've seen some significant changes in AM prices and also adjustments in the urea price. So if we start off by looking at natural gas prices in the UK and on the continent, we can see that they've alleviated over the last few months. European gas storage is above targets set prior to winter. Quarterly liquidity remains thin, which increases expectations of volatility in these markets. If we take a closer look, Q1 and Q2 pricing across Dutch TFF and UK prices are higher than the December month. The higher forward pricing coincides with the timing of the lowest natural gas storage levels presented by the OECD last week. In their stylized scenarios, buying of natural gas could increase through the spring and summer period. A cold snap in winter 22/23 or lower LNG imports and a cold winter in 23/24 heightens the risk of supply disruptions once again. Higher natural gas demand and reduced supply could increase upward pressure on UK fertiliser prices, and with UK and European AM production constraints, concerns still remain over longer term availability. Those that have found a use for urea in their nitrogen requirements this year will see an advantage on lower cost per kg of N. When considering the environment, straight urea is an ideal product to apply on cool, damp mornings in February, and more costly AN to be applied later in the season in warmer weather. Playing on the way in which the products work most efficiently is a way in which UK farmers can improve profitability and nitrogen use efficiency. This also coincides with the DEFRA regulations that are going to be implemented in October 2023 for use in spring 24, where straight urea can only be applied between the 15th of January and the 31st of March. And anything else applied after that would have to have an inhibitor on it. Even with the drops of £150 a tonne over the last 3 months on AN, urea still remains an excellent buy, and some are taking this as an opportunity to lock in some more AN at present. Urea prices, including adjustments on efficiency basis, have an upside of around £50 to £85 a tonne with AN at current levels when comparing on a cost per kg of N basis. In the US, one of the lowest priced nitrogen markets in the world at present, potential issues of low river levels and future rail strikes could help lift world urea markets also. But if we move back to Europe, AM prices are currently circa 16% higher than what we had in December 2021, whilst natural gas prices are around 177% higher in the same period. With downward movements in fertiliser markets globally and heightened costs for producers, various fertiliser manufacturers in Q3 have missed record profit expectations set by analysts as downstream affordability pressures have increased. And going forward, projections are that global urea consumption will actually increase, as well as overall agricultural consumption of nutrient N. Final thought on nitrogen production is that ammonia consumption in the non-fertiliser sector is expected to increase by 8 million metric tonnes from 2020 to 2030, according to the IEA, and investment in reducing emissions for ammonia production per tonne during the same period is expected to be around $32 to $36 a tonne, whilst in the following decade this is expected to be over triple that amount. In these scenarios, in the longer term, we could expect that there would be support for higher nitrogen prices also because of this. And finally, if we have a quick roundup on the UK phosphate and potash markets, MOP appears to have stabilised at current levels, whilst TSP and DAP remain relatively weak. Buying has picked up as a timely delivery for spring application becomes a greater concern than the potential for further price drops at present in the UK. Thank you very much for tuning in for the November fertiliser update on the ADM Agriculture YouTube channel. We hope to see you again next time.